presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's happening, everybody? This is Jacob Shoup. You watch the Tom O'Brien Show. I hope you all have been having a fantastic day. Quite a rock today, man. I mean, look, we're up 0.13% in the SPY right now. You had some rally in the day. You come down around 135 to 552, really breaking some major levels of support, and we come back off, right? You have some decent volume, at least at the end here, at this kind of local top. You opened, pre-market, you're 563.75. We're essentially flat right now. Yeah, I guess you're up 0.12%. Looking at composite, you're up 0.99% at 17,641. The Dow Jones Industrial off about 0.43% at 41,729, with the Russell futures trading up 1.01%. Dollar off 0.53% at 103.28. Crude oil is moving. You have obviously some issues with Ontario, with Canada, cutting some of our energy there. Of course, Trump then says, hey, I'm going to add even more tariffs on steel and aluminum. That's bringing it up to 50% on both of those commodities. So the trade war is on. Of course, they have a new PM. Trudeau is out. They have Carney in. I really did think that, I think Bolivar was going to win, but I don't know if people, I got to kind of look into why they made that decision. But Carney has very aggressive language saying all these tariffs are direct attack on working Canadians. And so we're gonna retaliate here, and then Trump obviously doubles down. Let's take a look here. You have gold contract trading up 0.89% at 2,925, with copper up 2.78% at $4.79. Silver trading up 2.57% at 33.37. Lucid up minorly here. Steel Dynamics not as good as I had maybe anticipated with tariffs in this way, but still trading up 2.63%. I think they're probably pretty well priced at this level. They've been hovering around this 120 level for quite a while. Tesla up 5.57%. Now, you really don't have too much volume here. You had some nice volume to the upside early in the day. You come back down, trading into a low of 217.02, and then we slowly traverse back up. Most likely selling is kind of done for right now. We'll see what happens at the end of the day. Of course, you're pumping up this P, and be careful with Thinkorswim PEs, but trading right now at 115, market cap of $755 billion. You had UBS / price target, which I think they were smart to do. I think this equity has a lot lower to go. Trump comes out and says that the boycotting is illegal of Tesla, which it's not. But listen, this isn't just an American issue. This is a global problem. So just because Trump comes out and says, hey, I'm going to buy a Tesla anyways, he's doing a great job in Doge, it doesn't, matter. You're talking about an international company in markets where the purchasing of EVs is increasing, but the market share of Tesla is decreasing. It's a massive problem for Tesla. I don't think they get over it. Trump can say he'll buy a Tesla, and that's fine, but he's also antagonistic towards EVs, as we've kind of outlined, right? I think this is nothing more than just a headline, and it doesn't actually have any real change on Tesla, which leaves our thesis kind of intact, and this is going to continue to go down. And what is the intersection of people who really, really support Trump and buy Tesla? I would wager that it's not that large, right? So Tesla has some major issues. Again, another thing to keep in mind, we're still way off from earnings with Tesla. but they do the mark-to-market for Bitcoin, right? And that really helped them last quarter. If Bitcoin does not recover, they're going to have a lot of losses. So anyways, let's move on right now. It is a Tuesday, and you know what that means. It means we are joined by Basil Chapman. Basil Chapman is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour on at 10 a.m. Eastern Time right here at TFNN. Now is a fantastic time to check out the Opening Call. He's been making great moves. One of the things I want to say, as well as you get access to all of his subscriber webinars. He recently did one in November. And additionally, one of the best value added, I say this all the time, but he, on, I believe it's Friday or Saturday, Basil, you can correct me on the day on that, but he does about an hour long, kind of summary of what happened during the week, what they're looking forward to in the next week. So this is really fantastic, especially if you just got blindsided by this entire market. You don't know what to do. You don't know where to place your money. Now is a fantastic time to get the Opening Call newsletter. We have a 30-day money-back guarantee for all first-time subscribers. So if for whatever reason it doesn't work out for you, your money is safe. However, we are betting that it will. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well. How was your weekend good?
Yeah, very good.
Fantastic. What are we looking at today, Basil?
So let me just go through the Dow right now. So the Dow made a lower low today from the January 13th low. It went under it yesterday, closed a little bit above it. Today it went sharply low, went to 41,175. I said to subscribers from Opening Call, we are very close to some kind of, I call it a low, not the low, some kind of a bounce. And that we have certain clues that'll be after 1:30 this afternoon that we'll be looking for. So let me just go through a couple of things here. I just wanted to say, when you mentioned Tesla, I've been discussing Tesla for some time, and my conclusion was that based on my work that I've done over the years, looking at the CEOs, if they get distracted from the job, for whatever reason, Benioff wrote his book on social, I don't remember exactly what it was, but it was really social programs. Salesforce took a huge hit. It just goes on and on. So when Musk became part of the Trump cabinet, I said, this confirms for me that high that was made back in December the 18th at 488, you've got to be careful because he's lost his focus, and this stock should go much lower. Well, it went all the way down to the 200-period exponential moving average. That's at 234. Today it went down to 217.02. So there are certain things in the market that you can look for. The other thing I've been looking for are these double tops and also round numbers. So if you're looking at the Dow itself made a high back in December. It had a high on the 4th. It had a high of 44,073, dived down to 41,844. January the 13th, it made a beautiful low. We managed to catch that. It went all the way to 45,054. Just missed that made a double top high, and now we can talk about it because it's making some kind of an attempt at a bounce low.
Well, Basil, please stay right there, folks. We'll be right back with Basil Chapman after the break, taking a look at the Dow.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I'm joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. Check it out. Get a 30-day money-back guarantee. If you're a first-time subscriber, for whatever reason it doesn't work out, check it out. It's worth it. Basil, we're looking at the Dow before we went to the break.
So the other thing that I'm looking at here is that we have the DXD 2 times short the Dow. We're in at 25 today. It hit 28.98. I've got this as a leggy, but I don't always, the inverse of the whatever instrument you're looking at doesn't always coincide with the peaks and troughs exactly, but the pattern does. And this just says that it went by the 200-period exponential moving average at 28.20, and it's gotten a little bit overbought, and that it could pull back, but all the technicals here are still strong. And if you look at the corresponding Dow daily chart, all the technicals are still very weak. Look at the distance. You see the black, and let me make this with a pointer. The black and red lines. These are the 9. The black is the 14, and it goes when the 9 period goes under the 14. It goes pink. When it goes above, it goes green. And this just says you're going to have a rally into the 42,600s or more to even have a chance of getting the 9-period moving average positive again. And I did this arch formation with a plumb line that said, in 2 days' time, there should be a test of the January 13th low. We did it in a shorter time period. That always says, you got to be careful because the acceleration down. And you've got this arch formation that made the double top that I was talking about, and we've taken out. The week is young. I've got to wait till Friday at 4, but we have taken out all the left side lows, and that's going to be very important because the weekly technicals, you can see there's an S, and that's just the start of the 9-period moving average crossing negative. It's a weekly chart. I have to wait. But that's just a hint to say we might get some kind of bounces, but the real low, and I'll go to the volatility index, the real low is we're in this leg D right now in the VIX index, but I'm anticipating that it'll be in the 30s, and then we finally get a really strong buy signal, and it'll be sometime, I think, I've been looking for March as some kind of a low. Usually the tradition is March and October where we get serious lows. We'll see if that occurs here. So then a couple of other things. So you would think when you're talking low volatility, what are we having right now? We're having pretty high volatility. Well, you would think that the S&P, it's called the S&P 500 Low Volatility Fund, would be really tanking. Do you know that yesterday it made an all-time high in the 75-40s? I mean, that's the SPLV. I mean, who would have thought, right? When I looked at it, I said, that is really that's high volatility, and this is called a low volatility fund. Well, finally it made this peak D, and we'll see where it goes. But talking about double tops, look, 75.14 in November, the week of November the 29th of 2024, plunges down to the 68s, gets back to where? 75.43, just less than 50 cents above the previous high on the 10th, and now it's pulling back. But this is still a leg. It hasn't made a peak yet, so I'm watching it very closely. So when I've been talking about the diverse action in the markets, if you look at the XLC, which is the communications ETF, it's taken quite a dive. But if you go to Verizon, it was making all-time highs just the other day. Yesterday, in fact, it made an all-time high in the 47s. It took a dive today because it said it discussed the competition. But it's just really interesting that when you go through a lot of the stocks, the divergence is quite prominent. Coca-Cola making an all-time high. Then I go to VT. VT is the Vanguard. Oops, I thought I did that and then I lost the notation. There. Made a peak D, the Chapman wave. We're always looking for the highest peak D, where other things can happen. Well, it went to 124, and now it's at 116.53. That's quite a dive with a double top again. This is the Vanguard Total World Stock ETF. U.S. stocks make up 49%. So it's gone to an E in the weekly chart and an E in the monthly chart and starting to pull back. And that is the world market. So I'm finding it very interesting that it's really the Mag 7, really the biggies that were beautiful leaders. They've taken a big hit, but there are many stocks that are holding pretty well. And you've got to look at this as not just a bifurcation, but a trifurcation. There's certain areas, and I was asked today about the TLT. Yes. What do I think? Will yields be coming down? And I think the TLT, in a way, has been doing some of the Fed's work for it because, look, the yields, the bonds have come up sharply from 84.89 in the TLT on the 14th of January, and it hit 92. And it's trading right now at 90. So a lot of the work that the Fed would want to do is kind of being done through the lower yields. So with that, I wanted to just go back to a chart that I believe I showed it to you last week. No, right here. No, can I find it? Oh, that's a pity. Oh, I remember where it is. It's right here. So this is what I had spoken to you about. I believe it was last Tuesday, and I said, I'm watching this very closely. It's a monthly chart. It has the XLF financials. That's the pink chart right there. The blue is the S&P. It's the SPY, actually. And look, if you look at all these highs, they all correspond. So I don't ever hear anyone talking about the financials as being market leaders both up and down. But look, every low, it coincided. So this turn down is going to be very important. It's a monthly chart. I don't want to get too carried away. Month is still young. There's a lot of weeks to go. But this is going to be a warning for me to keep watching this very closely. So I wanted to mention these things, but I also wanted to say I've watched Trump since the 1980s. I had written a paper, and I mentioned him during the paper, mostly about his building.
That's pretty cool, Basil. I didn't know that.
Yeah, so he's a 51%er. He considers it a win as long as he gets that extra 1%. It's a win. So all of this, you have to consider that all of the tariffs, for him, it's just a big stick, and he's using it the way he's always the art of the deal, and he does it with leverage. So this is the first time that he's had a kind of back pressure, people coming back and saying, well, we're going to, but he wields it in such a way, and he has such a way of doing it that it's quite intimidating for even countries. We've just seen that Canada's back down with energy. So I'm looking at this and I'm saying, don't get too carried away. This is a method that he has. We don't know if it's going to work, but it's what he has used. So just treat it as another instrument in the whole technical toolbox. And in this case, it's the president that's using it. It's kind of a little shaky because we've never seen this before. But he might be doing something with Ukraine. He might be doing something with the Middle East. He might be doing something with energy. There are a lot of things that have to come together. And I usually say most presidents are really good at one thing or two things maximum in their presidency. He has a multitude, and not everything can succeed. So let's hope that it's the market that really survives very well. And I'm just looking at this on a purely technical basis. And so far, the daily charts have all gone to sell modes. I'm watching this week to see if the weekly charts go to sell signal and then sell modes. So far, the weekly charts have held okay.
Fantastic.
So that's the way I'm putting it.
Basil, thank you for coming on. We'll see you tomorrow at 10 a.m., okay?
Thank you very much.
Fantastic. Thanks, Basil.
Thank
Folks,
you,
now is the time to get the opening call newsletter if you want some more fantastic quality information like that, and it's more in-depth as well. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We have the SPY flipping red off about 0.2% now. We're about 0.1% at the beginning of the show, trading at 559.36 at the composite, trading up about 0.54%. That is also giving up some gains for the day at 17,556. Dow Jones Industrial trading off 0.75%, and the Russell trading up 0.66%, although we're up 1% at the beginning of the show. Gold contract up 0.96% at 2,927. Take a look at let's just look at Agnico. Up 4.09%. What a fantastic movement to the upside for this one. Some decent volume right in the morning and kind of just staying steady again as well. Another equity that's just been staying steady after a nice run up today has been Castellum, fluctuating right on either side of 10%. Again, it is a Tuesday. That means we have a packed day full of guests. Our next guest is going to be Tim Ord. He is of the Ord Oracle. You can go visit his website at ord-oracle.com. Check out his newsletter and his book. We love having him come on every Tuesday and Thursday. Additionally, you can go to TFNN.com, go right over to the services tab, and we have 2 fantastic webinars. Again, I think the one that is most pertinent right now is going to be that secret science of market tops, but the 6 secret ratios every trader should know is also a phenomenal webinar. Tim, how are you doing?
Good. A little surprise here.
No kidding.
Anyhow, let's start on the bigger picture. I flipped over to the weekly charts because the daily charts were kind of just getting wiped out, I guess you might say. So you have to look at the bigger time frames, what's going on. And actually, we'll cover this first, but the first chart is the weekly SPY going back to mid-2021. And it's just an indicator that's obviously is easy to use. It doesn't get triggered very much, but when it does, it works pretty good. But all it is this is a weekly Bollinger Band on the weekly SPY. And if you get a close below the lower Bollinger Band on a weekly time frame, if you can go, I can go back years and years for this, and the probabilities are really high. But if you go back too far, you can't see what's going on. So I went back to 2022. But on your own, it's an easy check. You can go back years, but you get a close below the Bollinger Band. Normally, it rallies back to at least, in most cases, back to the mid-Bollinger Band. And we're way below the Bollinger Band right now. Now, if it doesn't close below the lower Bollinger Band, a lot of times you come back down. And last week, if you go over here, if you look at last week, we did get below the lower Bollinger Band. I'm circling over here on the right, and it closed above the Bollinger Band. I really didn't want to see that, but sometimes you keep going up anyhow. But now we're way below the Bollinger Band, so this is a good signal. Is today the exact low? Don't know, but this week, if we close below the lower Bollinger Band, most likely we will be at a low of this week. And normally these rallies that come out of here are pretty fast and furious, and usually they're multi-week. Even in a bear market of 2022, which is this region back here, you have a couple of. It did right here. If you notice, we did go below the Bollinger Band. We didn't stick. It still popped. Here you went below the Bollinger Band. It didn't really pop. It kind of went up, came back down. But on this next week after, you did get a close below it. Right. Here's another one. Here's another one. Actually went above the mid-Bollinger Band. But I'm looking for a rally. If we do close below the lower Bollinger Band this week, I'm looking to rally back to the mid-Bollinger Band, which comes in around 595 on the SPY. Sometimes you'll exceed it. Sometimes you don't quite get there, but most of the time that's usually a good target. Sometimes, like back in October 2023, we got here and it just kept on going. I don't think we're in that stage of a bull market here. I think we may find resistance at that mid-Bollinger Band. So anyhow, that's what I'm looking at. Actually, I hope this week kind of remains flat, just as long as we close below the lower Bollinger Band. So that actually would probably increase a lot of people's anxiety too. Yeah. So fear is good in the market. If you don't have any fear, that's really bad. So if you don't have any fear in the market, you should be scared. So let's go to the next chart here. For some reason.
And so this will be a close for today, correct?
No,
or at any time
for the week.
For the week. Okay.
Yeah. Since it's a weekly chart.
I see. Yep,
You like, so you don't want.
Yeah.
Yeah. So you don't want this to rally this week. Okay. All right. So that's the week. So today's Tuesday. We got 3 days. If the market could stay below the lower Bollinger Band, most likely we'll get that signal. But I think we probably will. It's trying to rally today. I'm hoping it stays weak. Here's another chart. I flipped to the weekly chart. I use this on the daily chart. It works pretty well. But sometimes you got to flip to the weekly charts. This chart, goes, all right, too much here. But anyhow, this chart goes back to 2018. It calls tops and bottoms pretty good. The COVID crash back in 2020, it called that pretty good. We're back down around 31.37. Mm-hmm. What it is the weekly SPX tilt ratio. So you're comparing the equity market to the bond market in general. So you're using the RSI for that. There's always an equilibrium between the two. If one gets pushed up too far compared to the other, you'll come back down, which is why I use the RSI. And so we're in a buy area for this on the weekly time frames.
Okay.
There's one failure back in 2021, but all the buy and sell since have worked out pretty well. I wasn't looking at this chart on the weekly chart at this last high. If I would, I was looking at the daily chart, and the daily chart didn't get the RSI up there, but the weekly charts did twice. So anyhow, I missed that signal, but now we're basically back down into the bullish area. So I'm thinking the market probably just going to go kind of dead here. That's what I'm hoping for. Stay in this vicinity where we are and not move much. And then probably next week is, usually if you get high volatility markets, the market goes quiet. If you get quiet markets, the market volatility will really pick up.
I see.
So I'm thinking the market will be kind of quiet this week, rest of the week, and next week will be a screamer is what I'm thinking. Next week's also option expiration week, which normally is a bullish bias. So I think we're at a low. I'm long the market at a higher price, and we're going into a
Yes, we're going to break. And
commercial here pretty quick.
I think we have some questions as well, which I can pass on to you, especially regarding this. This is some fantastic stuff. Especially, you're looking at I'm looking at even individual equities. You got some large volume to the downside over the past. It takes some breathing room, to build up some more energy to, either way, I suppose. So, Tim, please stay right there. Folks, we'll be right back after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We were joined right now by Tim Ord of the Ord Oracle. Again, strongly recommend checking out his website at ord-oracle.com and over on the services tab at tfnn.com. We have the secret science of market tops and 6 secret ratios every trader should know. Well worth the time put into listening to these webinars. Tim, before we went to the break, we're looking at the SPX tilt ratio. Perhaps some bottoming patterns kind of coming out here.
Yeah, it's got some bottom. This is on the weekly chart, so it's not a daily chart. But I don't think we're the way it's kind of setting up. I think we're just going to kind of set here. So let's go to the next chart. So yeah, we got the weekly. So far, we got the weekly SPYs below the lower Bollinger Band. We got the SPY tilt ratio weekly SPY tilt ratio RSI below 30, which is it's kind of exhaustion move. Here's another weekly. I blew it up a little bit. You can kind of see these signals a little bit better. And what I'm doing here, I'm kind of layering stuff on just to help me give me more confirmation. And these are on the weekly time frames, not the dailies. So the weeklies rule the dailies, the monthly rule the weeklies, So the chances of a weekly signal failing is less likely than a daily. And so a monthly signal is more important than a weekly signal and so on. So that's the reason why I'm looking at the weeklies now, because things push way past the dailies to make any sense. So you got to look at the bigger picture. Now, for some reason, all the weeklies fail. You have to go to the monthlies. So, but anyhow, I noticed here the bottom window is the VIX. Next window up is the SPY VIX ratio. And normally, if you get the ratio, the SPY VIX ratio on the weekly time frame to hit this lower Bollinger Band or the upper lower band, you're normally at a reversal. And back in 2023, this low was picked out by the VIX and also closing below the mid Bollinger Band. And again, we're below, way below the SPY VIX ratio on the weekly time frames, way below the lower Bollinger Band. And also we're below the lower Bollinger Band on the weekly SPY. So it's kind of a double signal here.
Sure.
Just kind of reinforcing the idea that we're probably at some sort of important low. How big a low, don't know. And actually, I sent you over a chart.
Yes.
Okay, we're going to cover that in a second. This is what needs to happen on this next rally, what the chart I sent you. So let's see if we get, what's this next one? Oh, here's a blown up chart. This is what I want to look at. But you can see here you didn't close below the lower Bollinger Band. You still got to bounce. Here you closed below lower. You did not close below the lower Bollinger Band here, but you still bounced. Here, same thing. Here you did close, and finally you get a rally to the mid Bollinger Band. Here you didn't, but here you did. You get a rally, didn't go very far. Here you got another one. Market gaps up. This is probably what's going to happen next week. something like this. It's going to, if we close below the lower Bollinger Band this week, most likely you're going to gap up next week.
I see.
And probably have something similar to this. That's what I'm thinking. So we'll have to wait and see if that comes to fruition. Here's another one. You get a close. If you notice there, we gapped up again. So we'll see how that happens. And let's turn our attention to that chart I sent you.
Yes. Do you need me to pull it up for you?
Yeah, go ahead and pull it up.
Okay, give me 1 second here. This is the swag brought thrust, correct?
Yep.
Just one moment. All right.
I meant to put that in today's PowerPoint, but I got busy a little bit.
No, I get how it is. For sure. All right, let's turn over here then. Yep, I have it up here, hopefully.
All right. So, okay.
Yep, we're good to go. Yep.
All right. So anyhow, so all these charts I've been showing, the last 4 charts I've shown you, lows probably this week, and I'm hoping the S&P-Y stays below the lower Bollinger Band. If it does, the signal will get more power to it. If it closes above it, it takes some of the power away. So you want to actually stay below. So we got another 3 trading days to go for that to happen. So I'm hoping the market goes dead. Now, if we do get that signal and the market takes off next week, if you look at the bottom window, that's the Zwag breast thrust indicator. I covered on your show several different times, but it needs to get below 0.40. And the reading today was 0.39. So we got there, and now it needs to rally to 0.6 in 10 days. 10 days is 2 weeks. So if we get that, so this week maybe just stays around this 0.4 area or even lower, I don't care. But over the next 2 weeks, I want to see the Zwag breast thrust indicator go from 0.4 to 0.6. And if it does, that opens a whole new door to the upside. This is, if we do get to 0.6, that would be a breast thrust indicator, and they're supposedly only come in bull markets. We did get one back in January. All the shaded pink areas of time when you got them. And sometimes they're a little away from the low, but in general, we got one here back in January. If we get another one, I think this is still a bull market. If we don't, then that Zwag breast thrust indicator in January, to me, has just been a failure. And you have failures every once in a while. I mean, nothing's 100%. Sure. They are pretty rare when they fail. But if we get 2 in a row within, a couple of months of each other, that would open the whole door that, my opinion, if that does happen, then this is probably the head of a head and shoulders bottom, and we go back up to the previous highs. So we'll see if that happens or not. So 2 weeks from, it's hard to. I think the Bragg thrust indicator is going to stay around 0.4 or lower this week, probably until Friday. So you really don't start counting until it actually turns up. So it may not start. It could start today. It could start tomorrow. It could start Friday. It could start next Monday. But whenever it starts turning up, that's the time it starts counting. And so we'll see how that lays out. But if we do get to 0.6 in 10 business days, then we'll see. Will it happen? Don't know. But if it does happen, then I'm back to bullish. If it doesn't happen, I think we're just kind of sideways this year. You have a couple questions?
There was one in the. Give me a second to kind of pull this back. I know we're about to go to a break here. A second. This might be kind of weird here. All right, let's see. So we did have one in the den, and it was a question about the Trin and ticks. Let me see if I can pull this up here. He was saying, if I can get Tim's point of view over the Trin and tick being in balance versus in extremes, the mode is the SPY ES Mini. So I'm assuming kind of contrasting against the SPY and the ES Mini, but I know we're about to go to the break here. I don't know if that's something you can answer right now or if you want to have some charts for Thursday for it.
So he's at, actually the 10-day trend is not, it's like 0.1 is neutral. So, all right. I'll answer when we come back.
Yeah, hang right there, Tim. Folks will be right back with Tim Ward after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, welcome back, everybody. Tim, got a short segment here. Yeah, so I guess for him to clear up the question, he's saying, yes, the fact that the trend tick have been neutral, but the ES price has been so volatile. Do you have a point of view on that? Is that something you see?
So he's asking about the trend and tick.
That's right.
Compared to futures.
Yes. So he's saying that they've been neutral, but the E-mini has been so volatile. What's kind of your thought on that, if you have any?
I don't know. I mean, the market is volatile here, but the trend's not responding for some reason, and it's not all indicators work all the time, but the trend and ticks, right? Ticks are working okay, but the trend's not.
Right.
So
right.
I don't really have a reason for it. I'll put it that way.
Okay, understood.
All right. Yeah. So, but anyway, let's go to this chart. I got a minute and a half here, but if you notice on these rallies, I circled the volume.
Yes.
And the tall tail sign out of these lows will be the volume. If that volume is not higher than compared to the down volume, those rallies are not going to last. So out of this hole we're in right now, that volume's got to expand and be higher than the volume going down into the hole. So if we don't have that volume going up, chances are this next rally won't last. So that's another key sign.
Right.
So something to watch. Let's flip over to the gold issues. This is the weekly advanced decline cumulative we're still on a buy. This is current. Both those charts, advanced decline and up-down volume, are both above the mid-Bollinger Band. The trend's up. This is a weekly chart. These signals last 1.5 to 3 years, so that's good. Whoops. This is a trend falling indicator. I'm thinking once this thing gets above zero, a lot of times you can stay above zero for months. This one back in late 2022, 2023 was 5 months. This one is 16 months. So trends up on GDX.
Fantastic. Well, Tim, thank you so much. I know we had to cut it short, but that was such good information. I think we really got in depth, at least on the SPX. But yeah, we'll see you Thursday, okay, Tim?
See you Thursday. Sounds good. Thanks.
Thanks, Tim. Folks, thank you so much for joining me today. I hope you all have a fantastic rest of your day. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.
Building